the difference between a fixed rate IBC loan and a variable rate IBC loan? When becoming your own bank and using a specially designed cash value life policy, there's a couple of different ways that you can take loans against your policy depending on what it is that you're trying to accomplish. By the way, my name is Erica Neal. I'm an authorized evident banking practitioner and real estate investor and business owner, and I'm here to teach you how IBC actually works. So be sure to hit that like, share, and follow button. Fixed rate loans are exactly as they sound. This is a loan that you take against your policy with a fixed flat rate that's guaranteed to remain level. These fixed rate loans tend to be pretty low. For example, right now we're seeing fixed rate loans to be around 4%. Taking a fixed rate loan means that you are doing a direct recognition loan, meaning if you have $100,000 and you take out $70,000, then you're only earning interest on the $30,000 left over. Now let's talk about the variable loan option. Number one, these variable loans can only change the rate once a year. So at each year for your renewal, they can adjust the rate, but you're not going to be seeing it happen all throughout the year like what we see in the traditional investment and traditional lending space. We also don't see massive swings within the interest rate world of the variable rates for these insurance policies because they're not tied to speculative investment. Between 2019 and 2025, we saw the largest interest rate spikes that we have seen, at least in my lifetime. As far as my IBC policy goes, I had 3 or 4 different variable loans out between 2019 and 2025. And I can tell you, when I took these loans out originally, they were anywhere between 4.9 and 5%. So they are a tick above what the fixed interest rate options were. However, from 2019 to today, when I started at 4.9, I never saw any of my loans get above that 6% mark. So yes, can the rates change? Absolutely, but they're not going to change so dramatically that they're going to have a huge impact on your overall portfolio. Why would I take a variable loan? Variable loans are non-recognized. This means, back to that 100,000 example, if you have 100,000 and you take out 70 as a variable loan, you have a little bit higher interest rate, but they are not recognizing that you took the loan out. So you're still earning compound interest and dividends on the full $100,000 value. Just like Robert Kiyosaki says, you're giving $1 multiple jobs. As a wealth strategist, it's my job to work with my clients to figure out what are you trying to accomplish? What stage of your policy are you in? Because it's going to depend on where are you in the policy year and all these other factors. But my job is to work with you to figure out what type of policy loan should you take? What investment are you going into? And how can we create this strategic cash flow plan to go from your policy into your investment, into your real estate deal, into your business, and back again. If you want to learn more about how this works or get better understanding of what an IBC loan actually looks like, shoot me a DM, shoot me a message, or schedule some time. I'd love to meet with you one-on-one.